Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex, and today we're looking at 3 great Canadian dividend stocks to buy in 2020. If you're looking for some juicy passive income, these are definitely stocks to consider holding in your portfolio. Before we get into it, if you want to purchase Canadian stocks and pay $0 in fees, click the link in the description below to open your account with Wealthsimple and get $10 free when you invest your first 100. Alright, let's get started. The first stock is part of the financial sector and is one of Canada's largest banks. Canada's banks are some of the strongest banks in the world. Bank of Nova Scotia, now commonly referred to as Scotiabank, can be found under ticker symbol BNS on both the TSX and the New York Stock Exchange. As a Canadian investor, double check that you're purchasing BNS.TO, as there are tax implications on dividends if you hold the US listing. BNS have a dividend yield of 6.24%, which pays out $3.60 Canadian yearly. BNS is the third largest bank in Canada. They're heavily focused on diversification. BNS is the third largest bank in Canada. They're heavily focused on diversification. They're the only bank with a significant presence in all the major countries in the Americas: Canada, the United States, Mexico, Peru, Chile, and Colombia. They have a very high balanced portfolio, weighted towards Canada, but with diversified exposure to the US and in growth markets in Latin America. Alright, so taking a look at Bank of Nova Scotia's stock quote. Keep in mind that the day I'm recording this is the 17th of August 2020, so it may differ slightly from what you're seeing now. BNS closed today at 57.21 cents Canadian, that's down 47 cents or 0.81%. They have a market cap of 69.3 billion, PE ratio of 9.42 over the last 12 months, and an earnings per share of $6.07. Their 52-week range was anywhere between $46.38 and $76.75. And they're currently paying out that dividend of $3.60 Canadian, which is currently 6.24% dividend yield. The growth in the bank's earnings have resulted in dividend increases in 43 of the last 45 years. This is one of the most consistent records for dividend growth among major Canadian corporations. Looking at the dividend growth, we can see that in 2009 they were at $1.96 Canadian, which was 4.2% dividend yield, and now fast forward to 2020, they're getting that juicy 6.24% dividend yield, paying out $3.60 Canadian. Now, most of the large banks in Canada are good investments. However, at these prices, I think BNS is the most undervalued. If you're interested in knowing more about BNS, their business model, management, and the future outlook, I have done an in-depth analysis on them, but for this series, we will just be identifying great dividend stocks and looking at the basics. Click the link in the description to learn more about BNS, my favorite bank stock. Next up is a part of Canada's telecommunications sector. With only 3 big players, Rogers, Bell, and TELUS, you'll likely do well picking any of them. Today, we will look at Bell, which can be found under ticker symbol BCE on the TSX. They have a dividend yield of 5.87%, which pays out $3.33 Canadian annually. Bell is Canada's largest communications company, providing residential businesses and wholesale customers with a wide range of solutions for all their communication needs. Their operations are organized into 3 segments: Bell Wireline, Bell Wireless, and Bell Media. Bell Wireline provides data including high-speed internet access, satellite and IPTV, home phone communication services, home security monitoring, and cloud data products. Bell Wireless provides digital voice and data communications to residential and business customers, with over 3,500 retail points across Canada under their banners Bell, Virgin Mobile, Lucky Mobile Wireless, and their electronic store The Source. Bell Media provides conventional TV, specialty TV, pay TV, streaming service, digital media services, radio broadcasting, and advertising services. They have long-term broadcasting rights with HBO, Showtime, iHeartRadio, the NFL, NBA, MLS, FIFA, NASCAR, and many other major sporting leagues. They also own 18% of the Montreal Canadiens Ice Hockey Club and 37.5% interest in Maple Leaf Sports and Entertainment, which own the Marlies, Toronto Maple Leafs, Raptors, and the Toronto Football Club. Having a look at their stock quote, we can see that they closed at $56.44 Canadian, down 32 cents or 0.56% on the day. They have a market cap of $51.04 billion, a PE ratio of the last 12 months of 20.81, earnings per share of $2.71, a 52-week range of $46.03 to $65.45, and they're paying out an incredibly sexy 5.87% dividend yield, which is $3.33 Canadian. They've consistently paid out a high dividend yield. back in 2009 with a 5.8% yield, which equated to $1.62 Canadian. In 2020, as we just discussed, they're paying at $3.33. There are only three major players that make up the majority of the market share for the telecommunications sector, so you can't really go wrong. I own two of the three, and Bell happens to be one of them. Our last pick for today's video is Canadian Tire Corporation. This stock can be found on the TSX as CTC and CTC.A. Canadian Tire Corporation is a Canadian retail company which operates in the automotive, hardware, sports, leisure, and houseware sectors. CTC is considered a dividend aristocrat, which means the company has increased their dividend payout for 25 consecutive years or more. They currently have a 3.52% dividend yield, which pays out $4.55 Canadian. CTC has a number of banners within their company, including Canadian Tire gas stations, Canadian Tire Bank, Marks, which is a clothing and footwear retailer, FGR Sports that owns National Sports, Sports Expert, and Sports Check, Part Source, which specializes in commercial sales of automotive parts, Helly Hansen, which is a recognized brand for high-performance outdoor clothing, the Canadian division of Party City, and they also started a REIT which holds 349 properties across Canada. There are over 500 Canadian Tire stores, over 400 sports stores, almost 400 Marks stores, almost 100 Part Source stores, and over 300 gas stations, combining a total portfolio of over 1,746 retail storefronts. I'd also like to mention that they have an amazing and very valuable reward system, which I go into much more detail on my full analysis of this company. I'll leave the link in the description below. Now looking at CTC stock quote, they closed today at $130.65, up $1.46 on the day or 1.13%. They have a market cap of $8.25 billion, a PE ratio of 16:10 over the last 12 months, earnings per share of $8.11, and over the last year they've traded in between a range of $67.15 and $157.36, which is a very large gap, and this is completely due to the large sell-off we saw in March due to the virus. And of course the dividend of $4.55 Canadian, which equates to 3.52% yield. Looking at their dividend growth, we did see back in 2009 they were paying a measly 1.5%, which was 0.84 Canadian dollars. And we jump forward to 2020 and they're paying that $4.55 Canadian or 3.52% dividend yield, saying you get a payout and you get a payout. Everybody's getting a payout. This is significant growth and I love to see it. So what do you own? Do you own Bank of Nova Scotia, Bell, or Canadian Tire? Do you own all three? Or are you considering one of the three? Let me know in the comment section below. And as I mentioned previously, if you'd like to know more about Bank of Nova Scotia or Canadian Tire, click the links in the description to watch my full analysis. We go through their business models, management, financials, and future outlook. All of things which you need to consider before making an investment. And lastly, if you would like to see a full analysis on Bell or any other companies, let me know in the description below and I'll get to it real quick. That's all for today. Remember to like, comment, and subscribe to see videos similar to this one.